In the first YouTube that I did about 2 weeks ago, I suggested a solution to the financial mess that we are now in. It's a solution that is simple and understandable. As distasteful as it is, both for financial and political reasons, it is probably the only solution that will work and get things back to normal eventually. But I remain frustrated when I listen to our political idiots, pundits, and talking heads trade accusations about what happened and who was responsible. They never really say. So I decided to figure it out myself. What I'm about to explain isn't pretty. It's not going to make you feel good. But it's the truth. It's according to published records. I suggest that you sit down and watch this, or better yet, sit on the floor so you don't fall out of your chair. I first drew a simple chart of the typical mortgage system that existed before the current mess happened. It's easy to understand. When your average Joe wanted to buy a house, he walked into a bank to get a loan. Since the bank had a limited amount of available funds, deposits made by other Joes like you and me, they made sure that Joe could actually repay the loan by verifying Joe's financial condition through loan applications. If Joe was creditworthy and had an adequate down payment, Joe got the loan. The bank then had two options. They could either keep the loan and apply Joe's payments each month towards the loan balance and collect the interest until the loan was paid off, or they could sell the loan to one of two other financial institutions, the Federal National Mortgage Association, nicknamed Fannie Mae, or the Federal Home Loan Mortgage Corporation, nicknamed Freddie Mac. If the bank held Joe's loan itself, it was able to collect and keep all of the interest that Joe would pay. If they sold the loan, they would get less than the total of the interest payments, but they could get their money back quickly, plus some interest profit, and use the money to make another loan, or use the money in other ways, to meet withdrawal demands as one example. Sounds reasonable. Fannie Mae was created by the government in 1938 as a government agency, but it was made into a public company in 1968. Freddie Mac was created later, supposedly to offer competition, but both of these companies are called government-sponsored enterprises, or GSEs. We'll get to this in a minute. So Fannie Mae and Freddie Mac buy these loans, but what do they do with them? They package them together and make them into something called mortgage-backed securities. It's like a savings bond, and they issue these securities with a quote-unquote guarantee. And since Fannie Mae and Freddie Mac guarantee these securities, they set lending standards that banks must follow to make sure, as much as possible, that the Joes they are loaning the money to will actually be able to pay the money back. Like all publicly traded securities, the mortgage-backed securities are rated for quality and degree of risk by credit rating companies such as Standard & Poor's and Moody's. But since all of these securities are guaranteed, Standard & Poor's and Moody's consistently gave them high ratings for security with low risk, such as AAA, and they gave them a happy face. The mortgage-backed securities are then sold to other banks and securities dealers like Lehman Brothers, Merrill Lynch, and others, who then resell them to pension funds, IRA and 401k mutual funds, where they get buried with other bonds. I looked at this and it all seemed to be fairly reasonable, except for these two companies with the funny names, Fannie Mae and Freddie Mac. I mean, if you had a company, would you call it Fannie Mae or Freddie Mac? I wouldn't. So I decided to look a little bit closer at them. I asked myself, what is this government-sponsored enterprise stuff? It turns out that these two companies, while being publicly traded on the New York Stock Exchange, get special government benefits for free. They get to borrow money from the Federal Reserve at interest rates lower than any other company can borrow from. That's where they get the money to buy Joe's loan from the bank. They only have to keep half of the money in their vaults that any other financial institution is required to keep by law. They are exempt from some taxes that other companies have to pay, and they are exempt from filing information to the Securities and Exchange Commission, the SEC, that other publicly traded companies are required to file. These special government benefits are estimated to be worth $6.5 billion per year. The government gives this to them for free. The money, of course, comes from you and me in taxes. I said to myself, hey, wait a minute. What part of our government is quote-unquote sponsoring these companies, and who's looking at what they're doing? Well, I found that Fannie and Freddie have been regulated by the Office of Federal Housing Enterprise Oversight, FHEO. And while this agency is currently being disbanded and is being replaced by a similar agency with even more power called the Federal Housing Financial Agency, both of these agencies are under HUD, the Cabinet Department of Housing and Urban Development. HUD was created in 1965 by Lyndon Johnson, our president. And as a cabinet department, the head of HUD is appointed by the president. He's not elected. I also found